To start off this video, I just want to welcome you guys to the channel and all that. This is like my first official video that I'm going to do for this YouTube channel. I'm going to do a lot of things. I'm not going to go on and on about it, but there's just going to be a lot of educational stuff from like using ICT concepts. That's what I'm going to be teaching here, but I'm not just going to ramble on about it in one video because most people don't have that type of attention span. So I'm going to get right into my analysis, and the main part of just like this whole video, this whole like, I don't know, call it lecture or whatever, is to show you the kind of money that you could be making if you actually pursue this as a career path and actually put the work in. You could potentially make this type of money. But I'm not a financial advisor. I want to put this out right there. I'm literally having a financial disclaimer from this website that I have a link to that you can look at it. But I'm basically saying that everything that I talk about in these videos, I don't care, like, as long as it's financial. I want you guys to know that I'm not a financial advisor, and do not, absolutely do not, take any of the trades that I may show, which I'm not sure if I feel comfortable right now, but because there's a lot of security issues, and I don't want my freaking brokerage getting hacked into by a scammer, so I gotta figure out a way to actually, like, you know, show trades, show that I'm actually profitable. That way you follow the concepts. I mean, ICT's already proved it himself, but if you're taking my advice, I want you to know that I understand it on the same level as, somebody that's highly educated. And, if I'm using ICT concepts and I'm losing trades and showing it all the time and I constantly lose, you're not going to follow my advice. But I am saying that these are ICT concepts and this is how I use them, and I'm also uploading these videos just to help other students out. But like I said, very important that you read the financial disclaimer, because this is not investment advice at all. So I'm not going to tell you to buy anything, I'm not going to tell you to push a button or anything. I do not recommend that you do that at all. So since we got all that out of the picture, just, it's your job to go back there and read and understand how these things work. They do have stuff online that shows you how to do it. I mean, you can look into it and all that. That's fine. But I have I have the opinion that I do know a few things about the marketplace, and I have strategies that I think work, but they may not work for you. That's why I'm saying I'm not a financial advisor, so I can't give you advice, and it keeps my butt out of trouble. So we're going to go on the weekly chart right here to start off with on the S&P. I'm not going to put all the concepts in here that I see because I don't want to make this too long, but I'm on the continuous chart because I like the price action to the left, because we're actually working back into these, these old areas of, imbalances. Order block right here. There's an implied fair value gap right here. We could be looking at that down the road if we continue to, have down close candles being supported by price. So that's all we're looking for. But if we get, movement below this, then I'm more tentative to these lows down here. But I don't think that's going to happen. The only way I would think that would happen is if things globally got worse. Then I could see that. But right now we're kind of staying cool until the elections. So that's just what I'm paying attention to. But first thing I always like to look for is, well, we're on a higher time frame, so I like to look for a shift in market structure. Now, I've come to learn that you don't always need a imbalance, or the fair value gap, or whatever you want to call it. He uses two different names. I just call it imbalance because I think it's cooler. But we don't really have any of that right here, so we have a shift. We printed above this high right here, so we have a shift in market structure. And these, like, when this happened, this kind of was like, equal highs, so it kind of jammed through there again. So what we see here was to be expected. But right here, you kind of have this implied fair value gap. And you also have that volume imbalance right here between these two candles. So, yes, it went below that. But if you're trading on a daily time frame, honestly, I feel more comfortable leaving my stop at the low or probably at consequent encroachment of this lower candle just to be safe, because that thing looked like it came right down to that 50% level on the continuous chart though. So this isn't on the, the micro like June contract trade. Come on, get this in here. So just put it right there, just a little bit more. See, it didn't really hit it, so you wouldn't have got stopped out, and you'd be a happy camper right now. Because if you were targeting above this high, you should have already taken a partial up here at this candle's high right here, something like that. Just in general, you should have taken one. So you could raise your stop to break even. So you have no loss here because your stop is down below this right here. So you can move your stop up above here. It's break even, a little bit of profit, but it's better than having your stop down here and then having all this open risk. Because I highly doubt it's going to come back down here. If it did, something bad just happened. So this is probably could be an ideal area to entry, or an area to enter. And the reason why it kind of came down here as much as it did is because we had this gap here, and then we also have, I'll probably use these as your order block, but don't take my word for it. I'm not going to take credit for that being an order block quite yet, because well, I know it's prior to the change in the state of delivery, but there's also higher ones too, and I gotta make sure I go back and look at ICT to make sure that that's what he said it is. But for now, I just go with the fact that this order block right here, this candle right here, you got the 50% of that candle, which is probably kind of like right there, roughly. So it didn't quite hit that, so you would have been good there. What was I gonna say? So, oh yeah. So when you see it hit this down close candle right here, and you're on a daily time frame, for example, let's look at just when it hits it, and once it hits the mean threshold, we can go down here. And I'm actually going to use this chart right now real quick just to show you how much money you could potentially be making as of right now, because the chart on the micro June contract has not shown that these highs have been taken out. I mean, or these highs right here, actually, I think it is. I believe that this chart, it has taken these highs out, and it looks like, yeah, this one too. So it's just leaving that high. So on the micro, this is the S&P, which is the big contract. So the leverage is more. So that's why I'm trying to show you. But if I were showing you a micro, and when I do show you the trade that you could potentially be taking right now and be long in, just take and do 1/10 of that, and that'll be your profit. So if I show an $80,000 profit, just take 1/10 of that, and that'll be $8,000. That's how much you could potentially be making. And it also depends on the number of contracts. But I've seen ICT use 10, and I think that's more than enough. I mean, you could do 5, you could do a couple. You don't even have to do that many. You can make quite a good money with doing this. So, remember how I said weekly market structure shift? So we got this here. This is literally right here when I got above this high. You could trust that this whole area, that's going to be a low that's set in place. It's not going to violate that. But if you really want to be sure, let's say you're on a weekly chart and you're trying to trade, you're going to get a good entry inside of here and all that, and maybe down here in this wick area, right in that deep premium, right down in here, you turn around and all you got to do is use a daily chart. So you extend this over, that way you can find that 50% level. This, what is this? I was just on that. Oh yeah, it's that daily order block. Okay, so now we're refining this. So we could easily see this down close candle traded to if we look at the other averages. And I'm not going to get into that, but we could see that happening. So let's just say we want to order at the top of it, and our stop has to be, I like to play it safe because if I'm not choosing the right order block, I might get stopped out. So I like to just go a little bit below that 50% level. So let's just say we're using a daily time frame. We see this. Maybe we choose to enter in this, or maybe we demand that this be our entry. Okay, so if this is our entry, we can really refine it over here once it actually comes back to it. So if we want this entry right here at this blue line, that's the 50%. All you gotta do is go down the time frames, wait for it to hit it. See how it's hitting it right here? Boom, right here. Here's the magic. Market structure shift. Let's get the thing rocking and rolling here in a second. So we got a market structure shift right here. So we got all this junk, but we are expecting that the market is going to come down and hit this blue dashed line, the top of that order block. We're expecting that. So if we demand that, a really nice high time frame actually shows us that we're getting a good entry, we can take it down to the 15-minute here. And notice that 15-minute right here, oh, was it right here? No, right here, sorry. Oops. So this is where market structure had shifted above this high right here. So if we were late to the party and when we didn't get this entry, we could use this long wick as our entry. We could take the consequent encroachment of it, or 25% of it. Once it hits it, we get in. That's fine. You can do that too, but you have to wait for it to come back. But if it doesn't come back, then you have to utilize market structure. Like right here, like see how we shifted above that high? We didn't get that entry, but we got to enter in this. And then your stop would be below this low, because you don't expect it to go down there. And it came pretty close. I didn't really like this week. That was it was kind of a little bit, I don't know. I mean, I was a little bit thrown off about it, but I mean, we have this candle right here, the open right here, traded right down into it, and that could be also inside of a premium array that I'm not looking at too. So I'm not going to get into that, but I'm going to narrow this down for you. That way you can get to the the money, because everybody wants to see the money. Is it worth the money? Is your strategy going to work? Am I going to make money? So let's just say, because right here, I don't remember where, but this turning point right here that you're seeing, when it comes down here, right when it hits it right here, there's your order block on the 4-hour. Shift in market structure, leaves a gap right here. You could be entering right here if you want to, right here in this fair value gap. But if you expect the daily, and the daily hasn't been hit yet, well, then you just go down to this order block. So you take it down to a 1-hour, narrow it down, and help you out. That way you ain't got such a huge stop loss. So that's usually what I do. Once it hits it, boom, I'm in. So I would keep, literally, God, my mouse is acting up, sorry. It does this sometimes. Alright, so I would have my stop right here, and I would enter in right here. Or at the mean threshold of this down close candle. That might be a propulsion block, but don't take my word for it. Not quite sure on that. But it's a down close candle inside of a premium array, so I would take it as an entry. So let's just get to the bones of it. Let's just enter right here. I need to auto that. That'll help me. My mouse is acting up. There we go. Okay, so this right here, we're going to take... This is the only time we use this bar replay tool, by the way. I'm not using it ever again. You know, if you want to use it to see what you can make, or just, you know, make you feel better, or whatever you want to do, that's fine. But I'm just gonna go with market structure off of here. So market structure shift right here, above this high. There's a gap right here. Enter below the gap, and then basically just work from there. So let's use the bar replay tool. If my mouse is just terrible. Okay. I don't really like... How do you... Where's play button? Forward. Okay, this is a little bit... I like this better, because then you can actually get in there and actually buy it. So let's buy 10. Now this part where I'm going to use the higher time frame and take partials. So I'm going to buy right in here. And then I'm going to use the hourly time frame. And I'm going to look for at least 10 areas where you can take partials. So all this is our target. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, and then the last one will go above this high. If I remember that. Alright, let's go. Get close to our second one. Okay, there is one. Sold that a little late, but that's okay. First thing I want you to do after you see this or do this for the first time is I want you to go in to your charts and turn the profit and loss off and make it ticks. Because your mind will see the money and just be influenced by it so easy. Alright, next partial. Should be coming up here soon. I know it sounds easy because I know where the market's going, but right there. Do when we get off of this high. It has been we entered 13th of Monday. Or March 23rd. Or March 13th, 2020. That's when we entered. That's when we started our trade. And we are up $7,600. Month's not even over yet. This trade isn't even complete yet because these candles haven't even printed above those highs either, so we're not even completely out of this trade, to be honest. We were actually in it like this. There we go. Out. Didn't get to high, but I don't give a shit. Next one's above the high right here. And some of these highs are actually daily imbalances that we're taking profits at. That's a little intimidating, isn't it? Even if we gave everything back, our stock would be at break even, and we'd still be up $1,500 almost. That's the part that scares people, is those nice down close candles like this one right here. It's just returning into higher time frame premiums. Rather annoying, but it's gotta do what it's gotta do. Even I'm getting impatient for these to print. I have the power to speed this up if I want, but I want you to. See all these highs, they get so close to each other, so they're like relatively equal. And these highs, or these lows right here, and these highs are so equal. So it's like, which one's it gonna take? After that shift, right there below that low. Sell it short, boom, you're out. Not much, but it's something. It's tipping at 10 now. Just waiting for that print. See if we can run right above it. There we go. Got 6 on you. Take a partial here. So I've been on this trade for a month now. At this point, it would be if we were actually in it. A month and about a week. I'm gonna take a partial above this high here in between, right there. I'm supposed to take a partial, sorry. Let's wait for it to come back. That's good enough. When it goes above that high, there, and right there. And yeah. So we'd leave the last one on. So the last one, to be honest with you, I don't know how much I'm going to be worth. Definitely over 15K. But as you can see right here, not to brag, it's just to show you. Like, so literally, this could all come back on you. But the thing is you could be moving your stop up as it goes. So it's like you don't have to worry about that. Now on the weekly chart, you're gonna see something in here and up here that may make you feel comfortable moving your stop below this low or below this low. This lowest low right here. And then you would only be giving back about 55 handles. So do the math on that. I'm not going to, because literally look at this right here. That's almost $100,000. And 1 month and 7 days. And then even if it took 2 more weeks, like, and this turned into 26, which I don't know if it's going to, because I'm not doing the math on that. But you see the point? Like $96,000, and literally you just managed it for like 2 or 3 days. You know, just make sure it was moving out of this area and not screwing you over and stopping you out, because then it feels like you wasted your time, but you didn't. You learned from it. But after you see it start to move out of these ranges, especially above this high, you kind of tend to not have to worry about it as much, because if you're confident, you can move your stop up from, if you had it under break even here, and you see this low right here, and it's just like you just want to not have to worry about it, you're busy, and you just want to have your stop at break even. But it's done what you wanted to see. You want to see that market structure shift on the daily time frame, and then you just look for the, you know, the inefficiencies or the order blocks, or, you know, just anything that you can enter off of. You just look inside there, you find, you just dig, and then you look for an excuse for it to go above these highs, because there's just buy side resting above there. There's no order block. I mean, there is, but like these are just daily time frame buy side liquidity that has a higher time frame PD array above it, so it needs to go there to, you know, enter a discount. So honestly, I think your stop could be put to break even, you know, after about a week of managing it for like an hour or two, or like, you know, just making sure that you're on the right side of the market. Because you just go in and I hope it goes up. That's not going to work. That's not going to help you. You're just going to get stopped out. So looking at this is a simple, easy trade. Like, I wish that they were always this easy. I mean, this was an easy one. Going above these relatively equal highs, that was easy. But they're not always that easy. So you got to work. You got to put in the work to understand where the market's going. So with that being said, I think that long term, we're going to go above these highs right here, especially on the June contract. I'm actually long down in here. And I think we're going to go above here into this volume imbalance. But right now, the consequent encroachment between this candle's high and this candle's high, I want to see that traded too, and I want to see this high right here get violated, and then I want to see it go above this high and reach in there, and then eventually get up in here and then here, because this is really, like, it's been open for a while, and market structure, like on a monthly time frame, you can see it shifting. Like, we're printing above this candle's high, this short-term high. We've already printed above it. So I think longer term, we could reach up into this candle's low, and then kind of right here in the middle, between this candle's high and this candle's low. That's where I think we're going long term. So that would be 43.6, whatever. Low on this candle is. Oh, the close, sorry. 45.41. That's where I think we're going long term on the monthly chart. So, because we've supported price here, and this propulsion block right here has supported price. So if it's supporting price and causing market structure to shift, I think that long term we should be bullish. Now, I don't know if we're going to go back and hit all-time highs. That would be nice, because that tells me the economy's doing pretty good. But let's go look at the micro quick, and then I'll get off here, because I know I've been going on and on and on. So you can see that same thing right here. These highs haven't been taken out on the micro June contract, so that tells me that we're going up there, because the information is inaccurate. And then this on a weekly chart looks a little bit cleaner, but it is definitely not the same. Like, this looks nothing like the continuous chart. This is huge. So yeah, I still think we're going higher. So hopefully you learned something from this, but I'm gonna wrap it up. I didn't think it was gonna take that long, but I gotta get moving. So remember the financial disclaimer. New videos will be coming out, you know, helpful ones to generate income. to help you pay your bills and make ends meet. Those will be coming here soon. So, all right.